SoFi stock just went through one of its most volatile weeks in a long time, but behind all the noise, there are some hidden signals that most investors are missing. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's dive in. SoFi Technologies, ticker symbol SoFi, closed the most recent trading session down about 2.8%. And if we zoom out just a little bit, over the last week the stock dropped nearly 8.6%. In other words, SoFi has been stuck in one of those frustrating consolidation phases where it struggles to hold momentum. After-hours trading did show a small bounce, up around 0.3%, but what really stood out wasn't the price action. It was the unusual transactions happening behind the scenes. On the surface, there was nothing directly from SoFi itself. No SEC filings, no official news, no new updates from CEO Anthony Noto. Instead, SoFi's price action seemed to be piggybacking off the broader market. At first, the overall market looked fairly stable. But as the day progressed, investor sentiment weakened because of renewed fears about a potential government shutdown. Adding to that mix was some surprising speculation coming out of Washington. Reports suggested that former President Trump was considering a rebate check program in the range of $1,000 to $2,000 for taxpayers. If that becomes reality, it could inject short-term optimism into the economy. We're not talking about a stimulus package on the scale of 2020 or 2021 that sent everything soaring, but a rebate of that size would likely lift equities across the board and probably give crypto a boost as well. For investors, it creates a weird push-pull dynamic. On one hand, the intention behind tariffs was to reduce debt. On the other, giving money back to taxpayers might fuel markets in the short run. Now, one of the biggest factors weighing on SoFi specifically wasn't Washington, but Wall Street analysts. Giuliano Bologna, an analyst from Compass Point with a success rating of around 58%, came out with a fresh price target on SoFi, and as has become almost comical at this point, he slapped the stock with a bearish $12 sell rating. The timing is almost too predictable. It seems like every time SoFi is already under pressure or consolidating, bearish analysts pop out of the shadows with new negative ratings. Investors who've been following SoFi for a while know the pattern. Before earnings, big names like KBW or Bank of America love to drop bearish notes on SoFi just to keep sentiment suppressed. So, if history repeats, we should expect more bearish ratings to roll in before SoFi's next earnings call. Meanwhile, short sellers were fairly active. Around 339,000 shares were returned, bringing short interest to about 9.5% of the free float, which works out to over 112 million shares currently being shorted. Interestingly, on this trading day, shorts didn't really push aggressively. That's because the options chain didn't require them to. Looking at options activity, we had about $85 million worth of calls and $20 million worth of puts traded, with nearly half of the total options volume leaning bearish. Net premiums were down about $3.4 million. That's not insignificant, but it's not a full-on attack either. Why? Because at the current share price, most of the open interest below $25 was already in the money. There weren't any huge option walls that shorts needed to defend. If the stock was closer to $28, shorts might have felt the need to intervene and push the price back down. But at $25 or below, they could essentially sit back and let the natural market forces play out. Digging into the secondary market, there were multiple large block trades above $100,000. The interesting part is that most of these trades came after hours on Friday, and rather than selling, many of these looked like dip buying. That's unusual behavior. You don't often see large institutional money step in after hours on a Friday. Yet we saw transactions in the range of $25.2 million, $12.6 million, $10.5 million, and $9.45 million. The $10.5 million trade notably was a sell executed right at the open, which helped push SoFi down sharply in the morning. But after that, much of the big activity leaned toward accumulation, especially after the regular market closed. The dark pool data also paints an interesting picture. While we've seen some wild $50 million dark pool trades in recent sessions, this time the activity was more modest. The largest dark pool print was 8.8 million, with others coming in at 4.2 million, 3.5 million, and 2.6 million. Nothing extreme, but still enough to show quiet institutional positioning. Technically speaking, SoFi closed just above a key support level at 25.21 cents. The day's low was 24.84 and the high reached 26.18 cents. That $25 zone doesn't look like very strong support, but the fact that SoFi managed to close slightly above it hints at a potential short-term rebound. What's more significant is that the stock briefly dipped below its 50-day moving average, which sits around 24.93 cents. That moving average hasn't been touched since late April 2025, when tariff fears rattled markets. The 50-day is going to be a critical level to watch next week. If SoFi can hold above it, bulls may find renewed confidence. If it breaks decisively below, the door opens to deeper downside, possibly toward the $22 level projected by some technical models. Adding to that, a number of large institutional trades placed earlier this week were betting on SoFi sliding below $25 and even down toward $22. That suggests that at least part of big money has been positioning for more weakness in the short term. Now, all of this sets up an important question. Will upcoming earnings change the story? Because despite the bearish noise, SoFi has a track record of sparking FOMO rallies leading into earnings. If the company delivers another strong quarter, it wouldn't be surprising to see sentiment shift dramatically. Until then, investors are stuck navigating this choppy consolidation. Here's the irony, though. Even Compass Point's latest bearish report wasn't entirely negative. Yes, they slapped a sell label on SoFi with a $12 target, but they actually raised that target from $6. That's a 100% increase. In other words, even the bears are being forced to acknowledge some improvement. Whether you view that as positive momentum or just continued pessimism depends on your perspective. From my side, I've been managing my SoFi position with a mix of buying and options. Recently, I picked up shares around the $26 range as part of my dollar-cost averaging strategy. I also sold some $25 puts, which turned out to be a good play since the stock bounced off that level. That allowed me to pocket the premiums while maintaining exposure to the upside. So where does this leave us? SoFi is in a tug-of-war between bearish analysts, cautious institutions, and a retail base that still sees it as a high-growth fintech story. Short interest remains significant. Option flows suggest ongoing skepticism, but after-hours accumulation hints that big players may quietly be taking positions. The next major catalyst will be SoFi's Q3 earnings, and until then, the stock is likely to keep chopping around these support levels. The real test will be whether earnings reignite investor enthusiasm and force shorts back onto defense. Until then, patience, risk management, and a close eye on technical levels like that 50-day moving average are the name of the game. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.